Starting out our week talking about the most important topics in the housing market, and that is exactly what we're going to continue to do today. So, as always, pop into the comments, pop in and tell us where you're tuning in from this morning. We love seeing our members from all over the country join us week after week and learn about what's most important in the housing market. You know, there's so many questions out there that we want to be able to help you answer, and that's exactly what we are here to do. So, welcome back to our KCM members, and welcome to those of you who are joining us for the first time. You know, we're here just about every Monday morning at 11 a.m. to really dig into what is happening in the housing market. And today we're going to be talking about inventory. We're going to be talking about active listings. We're going to be talking about new listings. We're going to be talking about how listings and inventory are impacting the housing market today and how you can kind of guide your clients through this process. So be sure to say hello. We are going to be answering questions at the end. So go ahead and you can pop your questions into the chat as we go through today. We've got a lot of slides to share for you as well, a lot of great graphs that I want to make sure you get in your hands. So if you're a KCM member today, you will be able to go back into our member area, download these slides that I'm sharing, use them in your market. You know, on social, wherever you want to put them, customize them, they're all yours. So you can download those in the member area, or if you're not a member, you can head over to trykcm.com and you'll be able to get these slides as well. We've got plenty of other resources there. We're going to be talking about those throughout the next few minutes or so, but want to make sure you can get everything you need to be that trusted advisor, to be that market expert. We have those for you. So like I said a moment ago, we're going to be talking about inventory today. And I think this is a really important topic because the housing market has truly shifted significantly this year, and inventory is a big part of that downstream impact that we're seeing. So what I'm going to do is I'm going to go ahead and I'm going to share my slides so we can jump right in today and get you everything you need. So there we go. So you are here for the KCM Deep Dive Inventory Update today. We're going to start with this quote here from Danielle Hale at Realtor.com that I think really sets the stage for what we're talking about today. She says, as the rapid run-up in rates reshapes housing market dynamics this fall, both buyers and sellers are taking a step back to recalibrate their plans. Home shoppers are looking at a monthly mortgage payment that is roughly $1,000 higher than at this time last year, and incomes are rising, but not by that much. So what does that mean? You know, as mortgage rates have been rising exponentially this year, it has caused buyers and sellers to just kind of say, hey, let me think through this. What's happening? It's that rapid rise that's causing people to say, I'm not sure what I want to do here. I want to wait it out. I want to see what's happening. And that's impacting first-time buyers who are looking to purchase their first home. You know, they're feeling those affordability challenges. And it's impacting sellers or homeowners that maybe were thinking about selling their home, but now they're just waiting to see what happens. Maybe they've locked into a lower mortgage rate over the past couple of years by refinancing. You know, we're in a very different dynamic than we were a year ago, 2 years ago. And that is really the impact of rising mortgage rates. Now, what we're going to talk about today is the downstream impact that has had on inventory and really position what's happening with active listings, what's happening with new listings, and how that's impacting prices in particular. So I want to start with this graph right here that shows homes actively for sale are rising, but still below pre-pandemic levels. So we're seeing more inventory on the market right now. That is because the pace of sales is slowing. Homes are staying on the market longer. You know, it's leading to far more active inventory, far more homes available for sale than we had at this time last year, but still below pre-pandemic levels. So looking at this graph, you can see exactly what that looks like. Those lines up at the top, 2017, 2018, 2019, this kind of light blue and gray, those are pre-pandemic years that we call, you know, more normal. They followed a very normal cadence for inventory on the market. You can see active inventory starting low and then rising through the spring and then kind of tailing off towards the end of the year. Pretty typical seasonality. Now, of course, the orange line is 2020, very different. The green line, that was last year, 2021. Inventory started out historically low and then rose a little bit, but certainly never reached pre-pandemic levels. Well, where are we now? We're in 2022, which is that red line. And what you can see is the red line started out inventory even lower and then crossed over that green line April and May. So what was that? That was the inflection point we started talking about in the housing market, where inventory started to grow because the pace of home sales slowed. And that was due to those rapidly rising mortgage rates, economic uncertainty, everything that we've been talking about over the past, year within the housing market. And you can see that that red line of active inventory is increasing due to that slowdown. So it's more inventory than we had this time last year, but still below pre-pandemic levels. So what do the experts have to say about that? Well, here's another quote from Realtor.com. It says, despite the improvement in the number of homes actively for sale, active listings still lag their pre-pandemic levels. The number of homes actively for sale in October was 40.4% lower than the pre-pandemic 2017 to 2019 average. So we talk about those pre-pandemic years as being more typical. Inventory was low then, but it's certainly significantly lower now. And that is changing the dynamic of the housing market. It's certainly, active listings increasing is creating more opportunities for buyers, but we're still not where we were prior to the pandemic. So we're going to talk about that today and how this active inventory is impacting the housing market. And before we do, I want to touch on new listings as well. So new listings, this is again, according to Realtor.com, new listings, a measure of sellers putting homes up for sale, were again down, dropping 13% from 1 year ago. This week marks the 16th straight week of year-over-year declines in the number of new listings coming up for sale. So we're seeing more active inventory, but we're not seeing a lot of new listings. We're not seeing a lot of homeowners say, hey, I'm ready to sell, I'm going to list my home. So homes are sitting on the market longer. That is creating more active inventory, certainly more options for buyers, but not a lot of new listings coming to the market. Now, if we look at new listings now, we can see that it is down below previous years. So same kind of cadence right here with, the typical years, 2017, 2018, 2019, those blue and gray lines up towards the top. New listings increase towards that spring market when a lot of homes come on the market and then kind of tail off towards the end of the year. Well, what you can see in that red line is new listings continue to rise up until we saw like mortgage rates really kind of starting to drive the market in a different direction. Mortgage rates really rising, and then they started to tail off, and new listings are now below previous years. So we have more active inventory, but it is not coming from new listings. And that's a really interesting dynamic that we can see right here in this graph. This says homes actively for sale continue to increase, but not due to new listings. So those blue bars month over month are more active listings, more inventory staying on the market, and the green bars you can see for 4 months straight have been kind of tailing down. So what does this all mean for the housing market? It means we're not seeing a flood of inventory coming to the market. We're not seeing anything that would cause home prices to crash, for example. We just simply don't have enough inventory on the market. And I think this graph really starts to show that. It says housing supply is still historically low. So you've seen this before if you've been following along with us, but this is the latest update we have. Inventory the week ending of November 4th compared to the last 3 years. You can see that the same week in 2021, we have 43% more inventory than we did then. So certainly an increase, but look at it compared to 2019, that red bar down about 36%. So inventory is still historically low. And what does that do? That continues to put upward pressure on prices. So we're talking a lot about prices right now. We're seeing that deceleration. We're seeing prices start to come down in some markets. But really what we have at the end of the day is a gap between supply and demand. It is still there. This is a quote from NAR, and it says there's still a gap between demand and supply because we were underbuilding for so many years. So now we see demand is slowing, but it still outpaces supply. So we have fewer buyers in the market, we have fewer homes in the market. Demand is still outpacing supply. And what does that do? That puts upward pressure on home prices. Now, we're not talking about the upward pressure that we had over the past couple of years where it was 20% year over year increases, but we certainly are still seeing a type of market where home prices are not projected to crash. We talk a lot about where inventory comes from, and when demand is higher than supply in any market, that causes prices to rise. Now, it's a minimal kind of some up, some down. We'll talk about that in just a moment. But we're not in a market where home prices are projected to crash because demand is still larger than supply. And I think that this quote right here says it really well from Zillow. It says, buyers are still out there and willing to buy when they find the right home at the right price, which will provide a floor for the price declines we are currently seeing. So we're seeing some markets still continue to increase. We're seeing some overheated markets, especially out on the West Coast, decrease a little bit. We're seeing this overall deceleration in prices, but there's a floor for that price decline because we still have more buyers than sellers. But sellers need to do things right to attract the attention of these buyers, pricing their home competitively and making their listing attractive to online home shoppers. So of course, sellers who are ready to sell still need to do the right thing. They need to work with a trusted advisor. They need to work with their agent to make sure they're pricing their home appropriately, but the buyer demand is still out there. So while we still have buyer demand and we have an undersupply of homes, what does that do? Like we said, that continues to put upward pressure on home prices. Not a ton, but enough to keep home prices from crashing. We just don't have enough inventory on the market. And when we think about how this is projected to impact home prices over the next year, we can take a look again at this forecast that you've seen us share quite a bit lately, the home price forecast for 2023. These are the latest forecasts from the entities that we follow. Some are projecting a little bit of home price appreciation. Some are projecting a little bit of decline. It really depends on the local market and how that dynamic between supply and demand is happening in local areas. So if we average these out, we like to look at all the experts, kind of average them together to get a really comprehensive view of what's projected to happen for home prices next year. And of course, we know it's all based on supply and demand. When we look at these, some up, some down, maybe some overheated markets, a little bit more movement than others that are holding more steady, but roughly net neutral home price appreciation next year. So not a massive decline. We just don't have enough homes on the market for that to happen, whether it's coming from existing inventory, new construction. And you've heard us say so many times, we certainly don't have a wave of foreclosures or forced sales hitting the market. And that's causing prices to be more downward sticky. So, home price appreciation expected to be net roughly neutral next year. And that all comes back to supply and demand. And we have so many resources for this. We've been talking about prices, we've been talking about rates, we've been talking about foreclosures, all of these things over the past few deep dives. And I would encourage you to go back and rewatch some of those because this all kind of plays together. These are puzzle pieces that come together to help answer your clients' questions. And so go back and watch some more of those deep dives and go back and watch our monthly market report from November of this year. We pull all of this together and it starts to really help position for you how to be that market expert, how to have the visuals and the talking points and the data and information that you need to be that trusted advisor for your clients because they have a lot of questions right now. And, buying or selling a home is definitely top of mind for a lot of people. And they want to know, what's the best thing to do. That's where they need your insight. And of course, our deep dives and our monthly market reports aren't the only place where you can get more information from KCM. If you want more of this coming straight to your inbox, I would encourage you to check out trykcm.com/blog. You'll get the latest real estate news and insights delivered directly to you. We have great resources for you. Definitely go check them out. And you can be truly that trusted advisor in your market. So I'm going to pause right here, Jessica, and see if there are any questions that came through today.
Hi, Kate. Yep, I did see just one question come through earlier from Matt, who had a question about rates. He asked, how much did rates drop this past week? And does that trend look like it's going to last, or was that just a temporary drop, do you think?
That is a great question. We're definitely in that moment in time where we're continuing to see a lot of volatility among mortgage rates. We're continuing to watch inflation and rates generally respond. So the little bit of a drop that you saw over the past week, definitely a response to that. And it's something we're going to continue to watch because that is the driver. As inflation remains high, rates will remain high as well. So we're going to continue to keep our eye on it. But definitely, volatility is the best we can say right now because that's going to continue to move as inflation moves as well.
Awesome. Thank you, Kate. And that was the only question that I saw this morning.
Wonderful. Well, that was really a great question. So thank you all for being here with us this morning. As always, go check out trykcm.com. You can download the slides. You can check out our blog, all the things you need to give your clients the latest inventory update and much more. Thank you so much, and we'll see you back again next week.